Hello, everybody. Welcome to the IX Trading Room. We're all set up now for this live webinar that we've got today. We've got about 15 minutes or so where we're going to be talking about live market information. So that is the first thing I need to say to you. We are talking about live market information, and for that reason, I need to convey to you that it is just for your information purposes only. This is not to be construed as investment advice in any way at all. And we need to just confirm that everything is on board with that, because obviously that's the big disclaimer that I have to make. Anyway, so moving on to what we're going to talk about today. Well, we've got obviously the Federal Reserve meeting tonight. That's primarily the focus of markets today. Markets have calmed down a little bit in front of the Fed. It'll be interesting to see how they then develop in the wake of the Fed decision tonight. On from there, we've got the Bank of England tomorrow. Inflation for the UK came in well above expectations today. What does that do to the Bank of England decision tomorrow? Going to look at a bit of dollar action as well. Going to look at some dollar underperformance. Is that now starting to be a theme? And also looking at some equity markets as well. So starting off with the Federal Reserve. Now, obviously, so what the Federal Reserve has got is two issues that it's now having to tackle. Originally, it was sort of just looking at the US economy, basically focusing on inflation and unemployment or growth. Unemployment was remaining, or the labour market was remaining pretty sticky, so or tight, I should say, and inflation was remaining sticky. So there was obviously a mood in the US that they needed to tackle that situation. Interest rate expectations went through the roof, went through towards 5.69% on, I think, was the peak rate expectation at one stage, although some were talking about maybe 6%. Then the banking crisis hit a couple of weeks ago. A couple of US banks started to go under. You had SVB, Silicon Valley Bank, and you had Signature Bank. Both of those started to go bust. They got shut down, and there was another situation where First Republic Bank had to be bailed out by all the other bigger banks in the US, plumped together for $30 billion worth of liquidity for that bank. And it doesn't seem to have done a massive rescue job. I mean, yeah, it's sort of plugged a few holes for now, but certainly looks as though that there is still issues for First Republic. They're still trying to sell it. Apparently, they're struggling to find a seller that's willing to buy the assets without the backing of the US government. So that's an issue that is yet to be resolved. The banking crisis is yet to be resolved. Therefore, that puts the Federal Reserve in a really big problem. How does it tackle that? How does it cope in a banking crisis when it has to be raising interest rates to tackle inflation? Well, the likelihood is that now the Federal Reserve is expected to hike by 25 basis points tonight, and then probably will stop after that. The Fed funds futures, which is this chart I've got here, up towards 5%. You can see on this chart it comes up at 95, which is equating to around about 5% is where the peak Fed funds rate is going to hit, and then it starts to fall over around sort of the start of Q3, and then the first sort of full 25 basis points rate cut is starting to be priced around sort of late Q3, early Q4. So that is currently where the market is sitting, and you can see also with the CME Group Fed funds futures, or the Fed watch that it has, the tool is around about 86%, around 86% priced for a rate hike tomorrow. And then you sort of go through, I'll sort of click on June as the next big, you've got May meeting and then the June meeting. And then these two meetings are around about 50-50 for the possibility of another hike beyond 5%. But the likelihood is the market is pricing for the Fed rate hikes to probably stop around the mid. Well, basically, this is going to be probably going to be the last hike. And then the Federal Reserve may have to hit the pause button. Once it hits the pause button, pretty much markets are assuming that that will be it. Once it hits the pause button, it's going to find it really difficult to justify raising rates again after going on pause. And that is basically where the markets are at the moment. So probably go on pause for a couple of meetings, 2 or 3 meetings, and then start to cut, possibly September, possibly October time. That is where the market is sitting. So how does this affect the markets? Well, what we can see is that US bond yields are still very volatile. I mean, very, very volatile on bond yields. Very wide ranges on US Treasury yields. That's the 10-year hit. It fell from 409 to 329, so lost 80 basis points in the space of a couple of weeks, and then just rebounded a little bit. But essentially, the markets are fairly steady at where they are, or starting to steady a little bit. You can see on the 2-year yield spike higher again, but yeah, it's nothing massively, not regaining all these rate hikes that markets have been pricing previously. So markets are now starting to factor in that the Federal Reserve is likely to be one and done after today. So where does that leave dollar positions? Well, interestingly enough, let's get back on that chart and we can get the dollar index. What we've seen is that this is the dollar index chart. We can see that dollar has fallen over in the last 2 weeks as markets have massively scaled back those expectations of rate hikes. The dollar has fallen over and the dollar is now underperforming, and we can see actually it's fallen below a medium, sort of a mid-range pivot area. I'm sort of just taking this dollar position as a trading range at the moment, 1.0082 up towards basically 5 big figures on dollar index, and basically mid-range of that. It's fallen below mid-range, so that would now suggest that the dollar is under pressure to the downside. And we can see that playing out through, for example, euro dollar. Let me get the euro dollar chart. You can see that this ranging sort of situation here between sort of 105, where are we looking at? So 104.80 up towards 110.30. We can see that we've moved through that towards the test of that 108 big figure mark. Testing that 108 big figure is important on euro dollar. Move above that on the Fed tonight, and that is bullish. That is bullish for a move towards 110.30 again. So that is the big level I'm looking at. Technically, we're speaking about a more positive outlook on the RSI, which is momentum. Momentum is positive with the euro now against the dollar, moving higher. You can see that euro dollar is pushing above, pushing on the resistance of this mid-range pivot area. Mid-range pivot sort of between sort of 107.35 and 108 big figure. Above 108 big figure is bullish on euro dollar in my book. Looking similarly, you could argue at sterling dollar as well. We can see that sterling dollar, let me just get sterling dollar going. We can see that sterling dollar has moved above. By the way, this is, sorry, I should have said earlier, this is the IX1 platform that INFINOX have now. And I love this platform. I think it's a really good functionality of platform. Lots of cool little widgets that you can use, and fully customizable. Great for your, well, from my opinion, great for a trading perspective. So yeah, we've got sterling dollar that's moved up through the resistance, and again, resistance 122 big figure. Moving through that 122, if you can hold on to that breakthrough 122 big figure, it looks positive, looking for more upside potential, but obviously needs to get through the Bank of England also tomorrow, and I'll talk about that very quickly now. Bank of England is expected to, well, inflation for the UK came in above expectations today. Where is my UK inflation chart? Here we see, and inflation started to tick higher again. Inflation fell in January, ticked back higher in Feb. Now the problem is that the Bank of England has still got to cope with this number at the top, this double-digit inflation on the headline. That is pretty punchy in my book, and interest rates are expected to go from 4% to 4.25% tomorrow. 2 out of the 9 are expected to vote for holding rates steady. But it'll be interesting to see how the Bank of England then sort of do the forward messaging after that. I mean, sterling has early morning, sterling did push higher because basically markets were fully priced in 25 basis points, even started to price a little bit for 50 basis points, about 10% probability there of 50 basis points hike tomorrow. But the question is it again in a position where it's one and done? Looking at that inflation, I mean, compared to the US inflation, I really think that the UK inflation is, I mean, look at these inflation numbers for the States. They've been dropping for a good few months now. Good 6 months or so, you've seen inflation falling away. Core and headline CPI falling back. Core PPI, which is a driver of CPI in the States, is now below the Fed funds rate. So there is reason to believe that US inflation has certainly peaked and is now sort of beginning to come under control to a certain extent. So the Federal Reserve, if it then stops, has certainly got an opportunity to stop rate hikes. So if the inflation continues to move and if the Federal Reserve stops rate hikes, then there is definitely a reasoning behind that. UK side, not really. I mean, inflation is not under control. It's still very high. There's no, for my money, there's no real reason to think that the Bank of England can stop. Although, obviously, bearing in mind that the situation with the banking crisis in the US and increasingly in Europe, or taking hold in Europe, that is the reason to stop rate hikes. But looking at inflation, no, not really. So there is a risk that the Bank of England has to continue higher, and that would be sterling positive, certainly given the fact that the Federal Reserve is likely to come lower. So yeah, we've got two sort of central banks with possibility that the Bank of England may not be to stop rate hikes tomorrow. So yeah, it's a very difficult one to square off for the Bank of England. But what we can see is again, US dollar under pressure a little bit against sterling, moving through the resistance to 22 big figure above 22.70, reopens these highs again. That's 24.45 the high. Moving on to the Australian dollar, a little bit of resistance coming in now. Aussie dollar up towards, written it down in my book, Aussie resistance 66.95, 67.85. That is basically around here. Get that crosshair. 67.75, sorry, 66.95 up to 67.95 resistance, and that is the key break. If you can get above 67.75, 67.80, that really does push Aussie into a more positive outlook. But look at this RSI, that is crossroads territory. Look at that, hitting 50, pulling back. So there's a really important moment with this resistance on the Aussie dollar. Does the Australian dollar start to resume strength against the US, or is this a failure point? Again, Federal Reserve meeting tonight could be key to that. Right. I was also going to talk about equity markets as well, because equity markets have, I think, well, there's a lot of volatility, big volatility. The first thing I wrote in my book today, big volatility. Volatility still in markets. Yeah, it's calmed down a little bit today, but still, I think, in markets. And once the Federal Reserve meeting's out of the way, we're going to see the next, I think, stage of where markets are at. The markets can digest the Federal Reserve tonight and then move on. And the likelihood is it's still got the banking crisis in play. How authorities are dealing with that banking crisis? How does the Federal Reserve deal with monetary policy in response to the banking crisis? Likelihood is that the Federal Reserve, as I said, then presses the pause button after tonight, and that will mean that equity markets could well start to drive higher again. Look at this resistance at 40.85 on S&P futures. Big resistance. Get through that, it really does start to move back towards the highs again. I'll show you this chart here, which reflects these key levels. You've got, it sort of had this move back towards the pivot area, this pivot area between sort of 39 3,900 up to a 3,925, breaking through that, holding that break, turns more positive, holding a move above 4082 area, which is resistance from late Feb. Break above that, and you really do then start to come back towards testing these range highs again. These range highs that we posted certainly back in January into February could well be seen. But obviously what we have is a lot of volatility in markets at the moment and interesting moves. But what is driving the S&P 500 higher? Let me show you. NASDAQ, tech stocks. Tech stocks are back in the game. Look at that. Wow. Back higher. Testing resistance, really big resistance around that. Well, if I put the crosshair on it, 12,946. That is a massive resistance. If I sort of come back here, we can see the importance of this resistance. Again, this was a resistance that got hit back in September and 2nd of Feb, hit the resistance and then fell over. Big resistance. If that can get through that resistance there, it really is, again, a strong move. And you've got the momentum with this move. So tech stocks are making the move. Now, tech stocks obviously are driving higher because of lower rates. Lower rates are a better environment for growth stocks. And that is why the tech-heavy NASDAQ is so leading the market higher for the States. So that's important. The other one, just before I go, just couple of minutes, the other one I wanted to talk about in terms of key sort of pivot area was this DAX chart. Look at this, up towards 15,150, 15,275. Tight little range it's had. It was resistances, but then became supportive. It's now resistance again. If it can get through that, get the RSI back above 50, you're then looking at the highs again as a next test. So that really is important sort of pivot area levels for these equity markets. So important moments coming into this Federal Reserve meeting. So the question, does the Federal Reserve hit the pause button tonight? Looking for the forward outlook statement. Things like the dot, have we got dot plots tonight? Yes, we got the dot plots tonight, obviously. It's March, sorry, I completely forgot. March dot plots. Looking at the dot plots, what do they say? Also looking for how Federal Reserve Chair Jay Powell speaks in his press conference. Is it a dovish hike of 25, as in hike by 25, hit the pause button? That is broadly speaking, I think, where the markets are sitting at the moment. Or is he still sort of saying that inflation is important? We've got to get a handle of inflation. If inflation is the focus, then we could see a bit of a disappointment for certainly bulls of equity markets, and that would strengthen the dollar again. Lots to think about going into this Federal Reserve meeting. So what I say to you is thank you very much for coming, first of all. Thank you very much for joining me on this webinar, IX Trading Room Live, every Wednesday at 4 o'clock. Come and join, subscribe to the YouTube channel, and come and join me in the webinar. And what I will do, I'll leave you with a quick video as to what we do at INFINOX and what we talk about in the IX Trading Room. But yeah, come back again next week and we'll talk about some markets a little bit more. Thank you very much, everyone, and I'll speak to you soon.